So it's loading up right now. Give it a few seconds. All right, cool. So we're here on YouTube now. All right, so we're good to go, guys. So we have one question from Brian. He's asking, can we review the K2 strategy on US 30? So I'll go over the two trades that I called today for US 30. They're both really good trades, so I'll be perfect examples for why I called them. But yeah, if you guys have any other questions, feel free to put them in the Q&A, and then I'll keep going down the questions. But once we get closer to 6 p.m., then I'm gonna start looking for trades. But as of right now, we're just gonna let the market move, and I'm gonna go over any questions or any theories you guys want me to cover right now. So let's get started with the K2 daily US 30 strategy. So I'm just gonna rewind time to right here, because that's when our entry was taken. I'm going to take this off. I'll put the pivots back on later when I go over the other entry that I called for today, because I called two different entries. I called the daily entry. So if you're in the premium, you'll see right here that I called US 30 today. Let's see, this morning. So this is the first one that I called, which was the daily US 30 entry right here. And as you can see right there, same setup as I have right here. I'm just gonna go over the requirements so you guys can understand, why I took this trade. Same strategy every single day. All the US 30 wins that we had this week were from the same exact strategy. So if you guys have access to the K2 indicators and the K2 strategies, you guys can apply this all on your own. You don't have to depend on me to give out a signal, because a lot of people miss them sometimes if they're moving too slow, because this requires that you're pretty quick with it, especially with US 30. It's a fast moving pair. So let's go to K2 daily US 30 strategy. First, you're gonna make sure that you look for trades after the New York Stock Exchange open, which is gonna be 6:30 a.m. Pacific Daylight Savings, my time. Depending on where you're located, that might be a different time, but for me, it's gonna be 6:30 a.m. And then after that, you're going to look for the first valid K2 signal. And then after that, you can enter on the open of the following candle. It's real simple, guys. It's only like two requirements technically. And then I'll show you how I did that. All right, so first you're gonna look for trades after the New York Stock Exchange open, which is 6:30 a.m. Pacific Daylight Savings Time. You can see right here, I have marked on the chart. This is 6:30 a.m. This is when the New York Stock Exchange opened. So after that, you're just gonna look for the first valid K2 signal. Right here is a first valid K2 signal because it's a buy signal with a green bullish candle. In contrast, right here, this would be a valid sell signal because it's a sell signal with a red bearish candle. So to make things simple, if it's red and red, that's valid. If it's green and green, that's valid. I mean, there's other factors to determine the way to trade, but for this specific strategy, you're just going to look for the first valid K2 signal. And I'll see if I could find an example of an invalid signal. Like right here. Right here, we have a sell signal with a green bullish candle. This is invalid because it's not red and red. If it was red and red, like right here, this would be valid. So that's just a quick example as to what's valid, what's not. But going back to the strategy, so first requirement, look for trades after the New York Stock Exchange open at 6:30 a.m. This is 6:30 a.m. So after this time, after this candle, it has to be after this candle. Can't be on this candle, can't be before. It's got to be after it. So first requirement's met. We started looking for entries after the New York Stock Exchange open. Next, look for the first valid K2 signal. The first valid signal is right here. And then after that, you can enter on the open of the following candle. So once this candle closes, you could enter at market, you can enter at buy stop, sell stop, buy limit. I mean, whatever you guys want to do to get in at this specific price point, because you want to get in at the perfect price point. You don't want to get in too early. You don't want to get in too late. So right here, generally our stop loss in TP is going to be 1,500 pips. That's going to be the minimum. If you want to make it wider, you can always do that. But from my experience and from all of my testing, 1,500 pips is usually the sweet spot for how much price moves within that specific session, specifically the New York session. So that's what we've been using for pretty much every trade. So right here, here's the setup. We let it run. And what do you know? Full profit target, guys, right there. Boom. So, you know, right here, here's the signal. And then here's the updates. TP1 was hit, TP2 was hit, and then full TP was hit right here. So if you took my trade, then you would have hit full TP. You know, if you had a standard lot, that'd be 15K. Not a lot of people here use standard lots for US 30, but it's just there for demonstrational purposes, unless, you know, you're trading FTMO. Normally people are using like a micro lot at 0.01. You still would have made 150 bucks off that trade. Some people are, you know, they level up to a mini lot. If you level up to a mini lot, you could have made 1,500 off that trade. It's just really up to you, you know, how you trade and all that. So let's see what else we got over here. Oh yeah, so the next strategy. So that was the first one, the valid K2 US 30 strategy. And then, so that's the first one. The other one that I called, so I called 2 entries over here. Let's see. So the other one was the K2 pivots entry. And I'll show you how we do that too. That's super simple as well. So I'm going to go and turn on the pivots because this strategy requires a K2 pivots. And then I'm going to go and rewind time to our specific entry point, which was right here. And then I'm going to go over the requirements. So let's go over number 1, K2 pivots strategy. And this can be used on all time frames if you want to scalp, intraday, or swing trade. It doesn't really matter. It's just up to you. Since it's based on momentum, it works on all time frames, all assets. So first, you want to identify the trend via the K2 pivots. And I'll go over that in a little bit. Second, you want to identify a pullback retracement. Third, you want to identify a rejection off K2 pivots area. And then lastly, identify a valid K2 signal. And then after that, you can enter on the open of the following candle. All right, cool. So these are the requirements right here. And they're real simple too. So basically, first you want to identify the trend by looking at the K2 pivots. So basically, if price is above all pivots are angling upwards and they're kind of spread out like they are right here, that would confirm a valid trend upwards. In the opposite right here, you can see when price is below the pivots are all angling down and they're spread out. You can see that it's clearly in a downtrend. So right here, you can see that price is above the pivots, they're spread out, they're angling up, and price is above all pivots. So that would consider it an uptrend. So right here, first requirement's been met. Next, you want to identify a pullback retracement. So as you can see right here, price came up, it stopped up here, and then it came down. This drop right here would be considered a pullback or retracement because price is shooting up and then it traces down temporarily. So this would be a retracement. Requirement number 2 met. Requirement number 3, identify a rejection of the K2 pivot area. So as you can see right here, price came up, price retraced and pulled back. And then right here, there was a rejection because price rejected off the pivots and then it shot back up. So requirement 1, 2, and 3 have been met. Lastly, you want to identify a valid K2 signal. Right here is a valid buy signal because it's a buy signal with the green bullish candle. So all requirements have been met. Next, you can enter on the open of the following candle. Similar to what I just explained, you know, you can enter at market, buy stop, buy limit. It really depends on you, you know, when you enter the trade and, you know, when you want to get in. But most of the time you want to get in right at this price point. So I'll place an entry right there. And then for our stop loss, the way that I identified, you know, where to put the stop loss was that I put the TP at where this position was. So let me just go back over here. This was our daily entry right here for 1,500 pips. So basically what I did here was I was pretty much taking a twin trade and I just wanted to get out at the same TP right here. So that's why our TP was 850. But there's a ton of different places you can put it. You don't have to put it there specifically, but I wanted a twin trade, so that's why I put it there. So pretty much after we set this up right here, it was 850 pips both ways. And for confirmation, you can see right here the K2 pivots entry. It said buy US 30, specific entry point, 850 pips. So you can see right there, that's set up. Same exact setup right here, right? So once that's set up, you let it run. And what do you know? Profit target. So that's how we won 2 of those trades. I'll show you another example for yesterday's. I know, Brian, you're still new, so you weren't here yesterday. But yesterday, we applied the same strategy for the daily entry. So right here, we have the vertical line at 630. I'll place the vertical line over here at 630 the day before. 630 right here. And see, this is why we don't take the candle right on market open, because it could be a false signal. And the reason for that is that the market is, when the market just opens, it's flooded with a whole bunch of entries, because, you know, obviously people have after hour entries, and then those entries don't get filled until the market actually opens. So once the market opens, you're going to see some unusual spikes in price in a certain direction, because there's a bunch of people that were thinking the night before, oh, we're going to buy at this, you know, at this time. So people put a bunch of buy orders, and you see price spike up. But right after that, price corrects back down, and that's why we don't get caught in this little trap right here. But, you know, same requirements. Look for trades after the New York Stock Exchange open at 6:30 a.m. Pacific Daylight Savings Time. This is 6:30. So after this, take the first valid signal. So right here, look for the first valid K2 signal. So right here is the first valid K2 signal. It's a sell signal with the red bearish candle. So same thing we did prior. Once those are met, you enter on the close of that candle. And then, like I mentioned, 1,500 pips is usually the sweet spot. And then we let that run. And what do you know? Full TP. Yep. So easy as that, guys. I mean, the strategy is super simple. If you guys want to kill it at US 30, this is all you really need. You know, I still don't understand why people keep failing at trading US 30. The strategy is only 2 requirements, and you trade it once a day. There's like no stress there. And if you're trading like a mini lot, you can make $1,500 a day for every winning trade. Obviously, you're going to have some losing trades, but the wins are going to always outweigh the losses because the win rate's so high. But if we go back to yesterday, so yesterday I called that signal right here. Daily US 30 session, K2 US 30 sell stop entry. So you guys see that right there? Same entry right over here. So if I go and I rewind this, you'll see it's the same exact entry that I called for that one. So right here, here's the entry. There's the entry right there, same exact entry. And then I gave updates as, you know, as price moved down. So we hit TP2. I think he hit TP2 so fast that I couldn't even call TP1. So I called TP2 right there. And then we ended up hitting full TP a few minutes later. So if you guys want to learn the strategy or, you know, apply the strategy yourself, it's super simple. Angel said, does it have to be on the 10-minute? Yes. So this strategy was created for the 10-minute. I mean, you can use the 15-minute, but I don't recommend it because I haven't done testing on that. And this is what it's meant for. I know some people use the shorter time frames or the higher time frames, but for this specific strategy, I don't recommend going in on any other time frame, because all the back testing I've done and all of the tests that I've tried it on have been on the 10-minute. I've tried it on the 15-minute and the 5-minute, and it does work, but it's not always going to be accurate. So let me just show you an example. So if I go on the 15-minute right here, so if you're doing the 15-minute right here, it would have worked as well, but it's not always going to be that same situation. So right there, 15-minute, it was pretty much the same entry, because sometimes, you know, if the momentum is the same on all time frames, it's just going to match up because it's only a 5-minute difference. So right here, obviously it'd be a win. Right here, you might have been cutting it tight because it's right next to the candle open. So this would literally be the first candle right after the candle open. So as you can see right here, it's literally the next candle. But if you go on the 10-minute, it's a little spaced out, gives you some space in between. But it did hit. So it does work. It's just, you're not going to get the same exact point. Like sometimes you might get the signal way over here on the signal candle. So the thing is, you're going to get mixed up if it's on this candle and then you miss the entry. Let me see if there's another one over here maybe. Let's go back to 6:30 a.m. So like right here, see, you would have gone screwed if you took this trade. This trade was a winning trade on the 10-minute. So let's see. Yeah, see, on the 10-minute, you would have caught this sell right here because it was after 6:30. If you're trading on the 15-minute, where is that at? Yeah, if you're trading on the 15-minute, you would have missed the entry because the candle, the signal candle came on that specific time at 6:30 because it's different candles. It came between 6:30 and 6:45. So you would have missed this entry. You would have taken this entry right here, and then let's see if you would have still won. It doesn't look like it. I mean, technically you could have if you move your stop loss and profit, but it doesn't yield the same results. So you would have gone stopped out. And that's why I recommend using the 10-minute, because that's what I've done my testing on, and that's what I've found the best results on. So if you're going to apply the daily strategy, only use a 10-minute. That's what I recommend. If you want to use the pivot strategy, then you can use other time frames. There's no set time frame for this specific strategy because all of the indicators adjust with the time, with the time difference. So you can use it on the pivot strategy, but for the daily, I don't recommend it. I only recommend the 10-minute. But okay, so let me, oh man, Aaron's here, this ugly fool. Let's see, where's he at? Aaron here? Of course he muted himself. He's probably on, I'm not gonna say it. All right, so let's see. Is there any other questions here? So we have one more question from Kevin. Kevin said, hey, Shawn, I'm looking at US 30. It's looking bullish. What do you think? 27917.79. Let me go check it out.
Zuko.
Let's see. Zoom out of this. Kevin said 27917.27. Let's mark it on the chart. $27.91779. That's pretty high, Kevin. You're trying to shoot for that. I don't see this hitting during Asia session. That's a big move. That's like 1,400 pips. During Asia session, price moves pretty slow, especially for US 30. I mean, eventually it could probably hit, but the thing is, I'm anticipating a pullback or retracement because it's been pushing up for so long. So I'm gonna be anticipating some sort of retracement, maybe an opposite candle or retracement candle. So as it pushes, it looks like it's gonna pull back right here actually, because it looks like it's flattened out. So it might come down and then test the pivots. And then if I get a buy signal, using the pivot strategy, like right here, obviously if you took the pivot entry right here, you would have won. Again, right here, you would have won. And then again, right here, this technically still would have been active if you took this pivot entry. But that'd be the same entry that I'd be looking for here. I'd be waiting for an opposite signal or some sort of retracement and then a buy signal before I take an entry in that direction. The thing with Asia session 2 is that there's price generally, it's already had a nice push upwards right here. So during Asia session, it's probably going to pull down a bit. It's probably going to pull down pretty far, maybe to here, here. And then probably by London session, it'll correct back upwards. But you got to keep in mind that it is Thursday. So market's going to be closing soon, tomorrow afternoon. So you know, in that case, you're going to see a lot of irregular movements in the market. That's why usually we take it a little easy on Thursday. And so most of the time we don't even trade on Friday because it's just too risky. It's not worth the risk. You know, you're going to risk losing money when you could have just not traded and just waited for the next week. But yeah, so pretty much I would just wait. Me personally, I wouldn't just enter just because it looks bullish, because it does look bullish. But here, let me just draw some. So say price is trending up right here. You can see that it was pretty bullish, and then it looks like it's now going sideways. So it might go sideways before it either corrects back up, like I mentioned, or before it reverses back down, because we're in Asia session. So it just really depends. You know, it's too risky for me. There's no catalyst here telling me to enter the trade. If there was a pivot entry, then yeah, I would take it. But there just isn't a pivot entry right now. So I'd probably hold off until you have some sort of confirmation. You can see right here, it's rejecting off the pivot. So if it breaks above here, then maybe it might shoot up, but who knows? Like we can't be for sure. And I only like taking trades, you know, if I know for sure, if I have a good understanding that it's going to go my way. So I'd probably hang tight on that for a bit. All right. All right, so let's go to the next question. All right, answer Angel's question already. All right, cool. TJ said, hello, bro. Can you explain how you secure TP1, TP2, etc. on US 30 10-minute strategy? Yeah, sure. So I'll go back over here. I'll just hide this. So let me go and set this up again. So this was the entry right here. I'm gonna hide the pivots because we don't use that for the strategy. And then it was 1500, 1500. And then I'll just set TP1 and TP2 over here. So I trade a specific way, but I'll just show you how to do it with one position. Generally, when I trade two positions, but typically I only recommend that you take one, especially if you're not, you know, if you're not really experienced at trading. It's easy for you to forget about the other positions, and if you do that, you could end up losing a lot of money. But okay, so let me go to TP1. So TP1 is right there. TP2 is right there. So basically, the way that the simple exit strategy is supposed to be used is you take one position. You take one position at whatever lot size that you trade at. So once price reaches TP1 right here, you're supposed to move your stop loss to TP1. So let's let it run right here. You can see right there, price shot right up, right? So as it does that, you're supposed to move your stop loss to TP1 right here. So in this situation, if price was to pull back on you, you get stopped out in profit, but you don't suffer any losses. So you guarantee this much profit, and then you eliminate your risk. And that's, you know, that's basic risk management, something that a lot of people don't understand. Like a lot of people don't want to take the small profit. They want to shoot for the home run, but then they don't want to lose any money. It just doesn't work like that. You know, if you want to be a long-term consistent trader, this is how you could be a long-term trader. You know, if you keep trying to go for the home run, well, for this strategy, it's different because it's such a high win rate strategy that's why a lot of people take the risk to just go to full TP, because we win almost every time. But you know, if you're just trading your own strategy or any strategy, really, it doesn't have to be K2. You just have to remember to eliminate your risk. So right here, once price reaches TP1, you're supposed to move your stop loss to TP1 right here. And then if price pulls back, so you can see right here, it pulled back. So you would have gone stopped out right here. You still would have locked in, what, like 375 pips? I think that's what it was. So if you locked in 375 pips, and then you were trading a mini lot, or not even a mini lot, or like a micro lot, like the bare minimum, you made 375 bucks. or 375 pips, and then you just multiply that by 10 cents per pip, you still would have locked in 37 bucks. And this is the bare minimum. Like this would have covered your K2 strategy with like 2 of these. I mean, your K2 subscription with like 2 of these. But if you're trading like a bigger lot size, then 370 bucks times $1 per pip, you would have made 370 bucks off that trade for 375 pips. But the way that I do it, which I don't recommend people do because a lot of people do this and then they don't do it properly. What I do is I set up 2 positions. So with my first position, I adjust the stop loss to here. So in this situation, like I mentioned, I would have gone stopped out at 375 pips for that first position. So let me just write something here. Position 1, adjust stop loss at TP1, TP2, etc. Position 2, onto full TP or stop loss. So this is the way that I trade. I have one position where I adjust the stop loss when it reaches TP1, TP2. So once price reaches TP1, I move my stop loss to, actually, okay, so this was actually a little wrong right here because the thing is, price actually reached TP2 over here. So this is a 10-minute candle. There's 10 minutes in between time. So once price reached TP2 right here, I would have moved my stop loss to TP2. So right here, price reached TP1. I move my stop loss to TP1. Then once price reached TP2 right here, I move my stop loss to TP2. So instead of locking in 375 pips, I actually would have locked in 750 pips. And that's a lot more money. So like if you were trading the bare minimum, 750 pips with a micro lot, you would have made 75 bucks off that trade. So if you're trading the bare minimum, you would have made 75 bucks off that trade. And then I would have gone stopped out of the first position. So this position is done. This position is still active right here. So technically it's still active and I let it run to full TP. And that's pretty much what happened right here. So if you're running 2 positions like that, I technically locked in 100 or 1500 pips plus 750 pips because I have 2 positions. So in total, I would have locked in 2,250 pips. And this is a little advanced. I don't recommend anyone do this unless you're comfortable with, running multiple positions. But if you're just running one, you still would have gone stopped out at half TP, which is perfectly fine. As long as you keep stacking these wins, it's not really going to make a difference because you're still going to be in profit. But yeah, that's pretty much how I run it. I know Kyle does it differently. So you mentioned like open a few positions. You can do that too, but I just don't recommend it because you're just putting on too much risk. That's what is Joey here? No. So Joy is one of the guys in K2 that passed the FTMO pretty quickly. It was because he was running 3 positions. So I know some people do that, but I don't recommend it. It's just too high risk. So like there's TP1, TP2, TP3. They would run 3 positions. So let me see if I could find Kyle's profits. Okay, cool. So like let's see. All right, cool. So Kyle actually does what you mentioned, but I just don't recommend it because it's too risky. But looking at Kyle's profits here, you can see we called it NCAD. So I called NCAD with 3 TPs. He put 3 positions, so he made 3 profits right there. Right here with EuroCHF, we hit stop loss on this, so he had 3 losses. But then for US 30 this morning, he did the same thing. He put 3 positions, so he made 1, 2, 3, and then this wasn't completed yet because this was midday. But he locked in a ton of profits. That's one way you can do it, but I just don't recommend it because if you forget about your positions and they all hit stop loss, you could lose a lot of money. But like I mentioned, the US 30 strategy is so accurate that Kevin just doesn't give a shit. He just Kyle doesn't give a shit. He's like, I'll just run 3 positions because he's so confident in my trades, which I don't blame him because we do usually have a higher win percentage. But this is what I'm worried about. This is why I don't advise anyone to do that, because I always recommend that you use proper risk management for every trade. And if you do this for every trade and you make mistakes, like you have too many trades running at one time, then you can blow your account really quickly, especially if you're trading US 30, because US 30 moves so fast, and you just won't be able to keep track of it if you're running, you know, more than 2 or 3 positions at one time. But yeah, I mean, this is how I recommend it. You could trade other ways, but that's just not how I'm going to recommend it, because a lot of people get greedy when they trade that way. Yeah, CT also mentioned as long as those 3 positions are equal to 2%, you're good. So that's what Kyle does here. So Kyle, he has, I think it's a 50K or 100K. I think it's 100K, yeah. So he's doing a 100K FTMO account. So he split them up into 2 positions right here. So this is technically this would be like 6 point, it'd be about like 6 to 8% risk, which is okay because the account's so big. But he's also risking a lot because you can only have like a 10% max drawdown. So that's why I just don't recommend it. But if you want to trade this way, I mean, feel free. But I just don't want to. I don't want to see like your accounts get blown because you're just careless. Because a lot of people get careless sometimes. They get too confident, and then they just let their trades run, and then they never make adjustments, and then they end up with the blown account when they could have ended up with partial profits, stuff like that. But yeah, so there goes the exit strategy right there. But there's a ton of different ways to apply it. There's not just one way to do it. So let me keep going through the questions. James said, so you move stop loss as soon as it hits TP, not when candle closes. Yeah, James. So I have so if you look at my alerts here, I have alerts whenever price reaches specific price point. So if price reaches that price point, I go and then I adjust it right away. I don't waste any time. Like once price reaches TP1 or TP2, I'll move my stop loss to there really quick. Because you got, I know most of you guys are familiar with the FTMO. Like when you're trading FTMO, it's different because you're trading a big account. Your main goal with FTMO is to minimize or eliminate your risk and to just keep stacking the wins, because the thing is with FTMO, they're very strict with their requirements. They don't give a shit if you like hit the home run every single time. If you make a ton of profits, that's going to make you happy, but it's not going to make them happy if you end up passing the drawdown. If you pass the drawdown, they're going to take the account away from you. So once you start trading bigger accounts, you're going to start to notice that it's more important that you lock in these small profits rather than aim for the home run every time, because this isn't going to happen every single time. And especially during the current market conditions with COVID, it's just unpredictable. The market's never always moving smoothly. Like right here, I should have just held on to it, but I got out at TP2 right here because, like, if you're trading this right here, this is like a scary move down. Like, okay, so you're right here, and then you see price, or not even right there. So you're right here, you see a strong bullish move, right? You're like, all right, cool, this looks fucking nice. It's about to hit full TP, right? But then a few seconds later, these are each 10-minute candles. So this is 10 minutes away from each other. So 10 minutes, you're happy. You're like, all right, this is already past TP1. It's past TP2. I'm ready for it to hit full TP. But then you get one bearish candle. You're staring at this candle for like 10 minutes and you're like, fuck, is this going to stop me out or is it going to go in the negative? The next candle, this would start to freak you out a lot more, because you're like, did it establish a resistance right here? Did it, is it coming back down? So right here, when it came back up, I think this is where I got out. Actually, I got out right here once it reached, because I missed this right here. Like, in the morning, the chats are just going crazy. So I'm too focused on the chats and I'm not looking at the position. So I think I missed the exit right here. But once this happened right here, I exited immediately once it passed TP2 again. Or I moved my stop loss to TP2 because I just felt like the market was moving weird, because generally I'm used to seeing it go directional for a while, not sideways. Because once it goes sideways like this is dangerous, because price could break up this way or it could break down this way. So, from my experience trading, like no matter how confident I am, it just really depends. So right there, I would have exited that trade because once I exited the trade, I was happy because I saw this drop and I was like, crap, good thing I got out, because this might be time for a drop right here. And I know a lot of people were hoping that price was going to come down, because the London call that Marcus called was a sell. So a lot of people were in drawdown right here who took the London, the London entry. And it was just bad juju in the chat. Like I didn't want to go against everyone because some people were wanting it to come down, some people were wanting it to go up. So in that situation, I was like, all right, I'm just gonna get out at TP2, where I locked in like 750 pips, which is not. I mean, it's not bad. It's still a profit. Profit's profit. But if I would have held on, I could have caught the full move up right here. But it's fine. The conditions right now, it's not a time to take risky trades. Like it's so unpredictable. It's just not. There's no certainty as to if this is going to happen or if it's going to come down. So me personally, I trade conservatively. Most of you guys who trade with me, for a while, you guys know that I'm bigger on risk management rather than going for these home run wins, even though we do hit them almost every time. But yeah, so let me go to the next question. Angel said, can you please call out the indicators used for each strategy? So Angel, each strategy is different. So the daily strategy, all you use is the momentum indicator, because there's only two requirements. The requirements that you trade after 6:30, and then that you catch the first valid K2 signal. So did you watch the videos, Angel? So let me go to the course right now. So if you guys have access to the course, this is what the website looks like. But once you go on the course, we have all the strategies right here. So the first strategy is the original intraday strategy. Angel, if you watch the videos, it explains exactly which indicators are used for each one. They're all very specific. So for the intraday strategy, you're going to use the momentum indicator, which are the vertical lines, and the trend meter. That's about it. You could use that. The K2SR is used in addition to every strategy, because if you guys aren't familiar with the K2SR indicators, what it does is it indicates where price is where it's likely to reject from. It goes in, it creates zones where price is rejected from in the past. So if you go back, far enough in data, you can see that price generally rejects at specific price points. So I'll go on the higher time frame. Yeah, so like right here, you can see it's super clear that once price created this top, it created this bottom, it created a strong support down here. So a resistance and then a support. Same thing with up here. Price created resistance, support, another resistance up here. It retested it a second time, and it created a very strong resistance, strong support. So if you're applying the intraday strategy, you're going to be using mainly the trend meter and the K2 momentum indicator. But on top of that, you want to make sure that you're not, so if you're entering a buy right here, right? This is a valid buy entry. If you took this trade, you want to make sure that it's not close to a resistance, because obviously if you took a trade that was right next to resistance, price is probably going to reject off it. And that's probably what happened here. So if I turn on the K2SR indicator, you can see that there was resistance up here. So that's why you would have avoided, that specific trade. It's not necessary, but like I mentioned, I trade conservatively. I want to take only trades that I know are for sure going to hit. So you would have just used the two indicators, but then you add the K2SR indicator to it, and then that's going to go and show you that maybe you shouldn't take this trade because price is probably going to reject right off it, which it did right here. That's the intraday strategy. For the momentum pullback strategy, it's the same strategy, it's just a different entry point. So you use the same indicators, the momentum indicator and the trend meter down here. So those are the two indicators used for the intraday strategy and for the momentum pullback strategy. For the scalping strategies, you can see there's multiple different strategies here. For the pivot strategy, you're going to be using the momentum indicator and the pivots indicator. That's it, just those two. You can see that, for each strategy, they all interchange. You're always going to use the momentum indicator, but for the others, you're just going to make a little difference. Aaron said, don't make a scene, but can you hear me?
Wow.
Bro, you put that in the chat to all panelists. Everyone can see it.
Oh, shit. Oops.
Yeah, no, I can hear you. But yeah, going back to go into the strategy. So for the pivot strategy, you're gonna use a K2 pivots indicator and the K2 momentum indicator. That's it, just those two. And then for the other scalping strategies, it's going to be similar to the momentum pullback and the intraday strategy. So you just go back to the indicators before that. You just take off the pivots indicator, and it's just going to be the momentum indicator and the trend meter down here. But if you want to go more into detail, you could just watch the videos. Like the videos are only like 3 minutes. Like it doesn't take that long to watch them and see exactly what's included in there, because that will be more detailed. Depending on what strategy that you want to apply, because I'm here explaining like each strategy very briefly, but you're probably going to forget what I said like right after this. So I think if you want to make sure that you know which indicators to use, just watch the specific strategy video, and then they'll tell you exactly what. So we've gone over the intraday strategy, the momentum strategy, the scalping strategy. Next is the zone trading strategy. For that, it's the same thing what I mentioned. So for the pivot strategy, or for the intraday strategy, you're using the trend meter. For the pivot strategy, you're using the pivot indicator. For the SR strategy, you're using the SR indicator. So as you can see, it's called the SR strategy, and you're just using the same indicator for that specific strategy. So for this one, you're going to use the K2SR version 2 indicator, and then the momentum indicator. So that's pretty much all you need for this one. And then, yeah, we already went over the pivot strategy. And then for the daily US 30 strategy, it's just the momentum indicator. I mean, it's probably confusing now because I just went over all the strategies right away. So Angel, if you want to go back and look at the videos, I mean, the videos are very short, so you can just go and pull that up real quick, and they're only like 5 minutes. So you can pull it up, and then you can see exactly, what indicators are used for that specific strategy. But the momentum indicator is used for pretty much everything. Like this is never going to be taken off, but for each specific strategy, you just use the SR, the pivots, or the trend meter. And then the SR could be used for everything else as well, just for extra confirmation, because obviously you want to know where price is going to be rejecting from. But yeah, I mean, it's real simple. Let's see, is there any other questions? Yeah, it doesn't look like there's any other questions, guys. So if you guys have any other questions, feel free to put them in the Q&A. Otherwise, I'm just going to scan the charts real quick to see if there's, I'm just going to make sure all the zones are on the chart for the 6 p.m. candle close. And then I'm going to see if there's any possible entries that are going to be developing for that signal call. But yeah, otherwise, just go ahead and put your questions in the Q&A. And if we don't get any questions, then I'm just going to go over the strategies, because we have a lot of people here that want me to go over, each strategy. And then that'll help me answer your question even more detail, Angel, because then I could go and break down each indicator as I go over the strategy. But okay, so let me just go down the charts real quick. I'm just going to make sure everything is here. Turn on the SR. Let's see. So looking at this right here, this would be a good buy entry if price was above this K2SR zone right here. The reason I wouldn't take it if it was right here is because, like I mentioned, price generally rejects off these zones. So you wouldn't want to take a buy there, and then it goes the opposite way. I'll go over the specific strategy later, but right now, I'm just going to scan the charts to make sure there's nothing. For the most part, I'm just going to be looking if the zones are drawn properly, because that's probably going to be the most important thing. You just want to make sure that you know where the zones are, so that you can analyze, the strategy pretty simply after you have those locked in. So that's good. And then I'll call out if I see any decent strategy. I mean, any decent entries, but just at the way the market's been moving lately, especially because it's Thursday, it doesn't seem like there's going to be very much movement in the market. was trying to determine if I should draw the zone right here, but it doesn't really look like it's. Usually for my zones, I like there to be at least like 20 pips in between, like a space. If there's not 20 pips in between, then I usually like to connect them like this right here. Because obviously you want to trade within a zone that's too tight. Because like say right here, if price came down into the zone down here, then I probably would have taken this trade within the zone because you can still lock in like 38 pips right here before it comes down to the bottom of the zone right here for a rejection. Um, but these are a lot of things that you'll learn as you apply the strategies. It's the same with just like visualizing the charts. Like you can see right here, if you have all the indicators, it makes it a whole lot easier for you to identify everything on the chart. So this is what a normal chart looks like. But if you have all of the K2 indicators, you know where the zones are, you know the direction of the trend, you know how strong the momentum is, you know when to enter trades. So these indicators, they're not required, but they make things a whole lot easier. And it just helps you guys visualize what I see, because obviously I can see all the stuff on the chart without the indicators because I created the indicators. This is like I could see all those other lines on there without having all this stuff drawn on. But this just helps you guys see what I see, because obviously you guys don't have the experience I do. And you guys aren't going to be able to identify everything that I can see without these things helping you. But once you apply the strategies enough, like everything will just start to make sense to you, because this pretty much gives you the blueprint what to look for. Like obviously if you're looking at this, you're going to look at prices trending down. If you're looking at this, you're looking at price going up. And then if you see the K2SR zones, you're going to know, maybe I should enter a trade right here because price is probably going to be rejecting from it. So pretty much the K2 indicators are just like they're like training wheels for you. They train you to analyze the chart in a specific way to trade, my specific style. Let's see. So we have a buy signal right here and it's above the pivots. So this might be a good buy entry over here. Generally, I put the stop loss at the previous swing. See how far is it from the zone. So I like to make sure that there's at least 20 pips. So this 24 pips, this might be a good entry, because the thing is that's why I have TP1s and TP2s. So like generally, TP2 is going to be like somewhere in the middle, and then TP1 will be somewhere around here, because what I anticipate is that once price reaches the K2SR zone, it's probably going to reject off it if it's a strong zone. So if you do that, you lock in your profits right here. And if you don't do that, then you could be screwed because you could come all the way down here, and then you'll end up with a loss instead of a 50% win. And a lot of people don't understand like why I put the TPs there, but this will make a lot more sense to you guys why I put the TPs in specific price points, because this just helps remind you guys that that you need to manage your risk. A lot of people don't manage the risk ever, and that's why people blow their accounts and don't last in this game very long, because as long as you manage your risk and you have a profitable strategy like the KC strategy, it's nearly impossible for you to fail at trading, because if you use proper risk management, you'd have to lose like 100 trades to blow your account. And I don't even think we have that many losses overall for like the month, the week, the year, I'm assuming. CT said I'd wait for it to test up to that zone, then down to bigger zone to get. Yeah, no, I agree. So CT was saying that he'd wait for it to test the zone up, and I agree with him too. So he's anticipating price to come up here, come back down, and then give like a buy signal for a pivot entry, because at this point the pivots will be way down here and price will be way above it. So that's actually a better idea, and especially because it's Thursday, because price is just going to move regular, and you can see that it's a strong zone because you can see right here price came up, rejected off the zone, came down, came up, rejected, came down. So it's tested it a couple times, 1, 2, 3, 4, it broke above, but then it came back down. So this is a strong zone right here. So CT's right about that. Me personally, I probably wouldn't take it. And it's only 4:45, so we have an hour left. So the thing is, this candle might push up to here, and by the time it closes, it's only going to be like a 10 pip gap right there. So I wouldn't even take it because it's too close. And I would hate to get caught in an opposite trade. Yeah, CT said bigger zones represent more volume, i.e. stronger attraction and bigger bounce. I agree. Um, and that's why sometimes I trade within the zones. Like if the zone is this big, I'll trade within it because there's a lot of volume there. But yeah, the zone's a little small, so it might, it might hit there and it might break through like it did right here and maybe create a double top right here. It might create, let me see if the zones are, actually there's another zone right here. So yeah, screw it. I'm not even gonna take this trade because there was another zone right here. I just didn't draw it yet. Let me see how far is it. Yeah, it's only 6 pips, so I'm gonna connect these zones. So this is actually a pretty decent sized zone right here. So yeah, I'm definitely not gonna take that trade because you can see right here, it's a pretty strong zone. Up and reject off pretty hard for 1, 2, 3, 4, 5. 1, 2, 3, 4. Yeah, this would be a 5th rejection right here. So it might be a strong rejection. So yeah, looks like we're not taking that today, or not now at least. Right here. Yeah, I wouldn't take this because it's against the pivots. Generally I don't want to trade with the pivots, not against it. KJPY. Me personally, I wouldn't take this because it's an invalid signal. However, so say price closed below the zone and then it broke back above with a bullish candle, then I would probably take a buy right there. But since this is an invalid signal, it just shows uncertainty in price because it's just saying that it's invalid, but the next signal is going to be a sell signal. So if there's a sell signal, it might close like way down here. Let's see what else we got here. CJ. This would possibly be a decent entry. It looks like there's news right now, though. Some strong, high-impact Japanese news. That's weird. I didn't see it on the calendar. Yeah, you know what, guys? There's actually news at midnight my time, which is like 6, 7 hours from now. So entering any trades right now would actually be really risky. So we might actually be done for the week because the last thing you want to do is get into a trade and then news hits at 12. There's a lot of news actually at 12:15 and then 12. Like all of London session, there's heavy news. So last thing you want is get into a trade and then price is spiking up and spiking down and it's just literally going all over the place. And you're just watching it like, crap, I should never enter this trade. But I'll still look for trades. But this technically might be a decent entry. But we'd have to. I don't know. Me personally, I just wouldn't take it. It doesn't look like a strong uptrend. Although price is above the pivots, it's still pulling down right here. So I probably wouldn't take it. Like something like this, I would have taken these because these look like a strong uptrend. But right here, it's not so strong. So me personally, I probably wouldn't take this trade. Euro odd, nothing there. I'll keep the pivot, the SRs on just so I can see. And there's a lot of levels being created here. CT said it looks heavy and we'll get sucked into the zone again for CJ. Let me go back to CJ. Yeah, no, I was thinking the same thing, CT. Like, I think if it closes below here, it'll probably, let me take this off. So price closes below here, it's probably going to come down and then just range within the zone, especially because of the pair. These are both safe haven currencies, the Swiss franc and the Japanese yen. So they're usually going back and forth anyways. So that's probably what I see happening because volatility is probably going to die down because it's Thursday, plus that there's a ton of news coming up. So a lot of people they're not going to want to trade during those times. So I'd probably just leave this alone. Euro odd. See, I don't like when prices is like this all over the place. Like for this, the pivots just keep crossing over each other, but there's no clear trend. Like right here, there's a clear uptrend, retracement, clear uptrend. But right here, you can see it comes down, then it comes up, then it comes down, then it comes up. It looks like it's pretty much in a range right here. So your odd might just keep bouncing around from zone to zone before it, determines a direction, which is just going to be, it's just too risky. So I'll keep an eye on euro odd. Let's see. Yeah, because if it closes below, it could probably have a nice push down, but I don't know. It's just too risky, especially with there's I think it's Euro news at midnight. Yeah, it's Euro news at midnight. I think at 12:30, and then one at 1, and then pretty much all morning. It's just risky. Yeah, CT says sideways. That's pretty much how I see Euro odd too. Euro odd's like one of my favorite pairs to trade too, if it's like directional. So if it's directional like this is like super easy money right there. But when it's bouncing around like this, it's just risky because it's such a huge move. So this zone right here is like 30 pips. So you'll literally see it bounce around 30 pips both ways. And you can see from each candle, like this candle is how many pips? Each candle is like 60 pips. So if you have like a tight stop loss, odds are you might get stopped out. Euro CAD, I don't know why I didn't. I don't think I called this because there was just too much stuff going on the chart. This is like another pair I don't really like trading when it's when there's no clear trend. Like right here, I'll take a buy right here and right here, but as it came down this way sideways, it's just too risky. There's no specific direction or price, so there's no entry there. Euro CHF. I'm actually gonna save from all the Swiss franc pairs because our only losses this week are from the Swiss franc, I think. Let me see.
I think it was from Euro CHF and UJ.
Yeah, let me see. Yeah, it looks like from this week it was Euro CHF, CAD JPY, and USD JPY. So pretty much the JPY. Actually, no. The other we had some good JPY trades. It was just yesterday the JPY kind of reversed on us, and then today Euro CHF, or no, it was yesterday. Euro CHF kind of stopped us out for a small loss. It was only like 20 pips, so it's not a big deal. CT said NZD JPY long held the zone in an hour. Let's take a look at that right now. A lot of people are asking about EG. I personally wouldn't. I wouldn't take it because it's right at this zone right here, so it's probably going to shoot back up. Probably test the zone again before coming back down. And also just because of the way it moves, it just moves too slow for me. Yeah, let's keep going down. EJ over here. SR. Yeah, and this is something that you guys have to do a lot too. Just make sure to whenever you look at a chart, make sure that you put out the zones first, because you want to make sure that you have the current zones, because the zones change after every couple days, weeks, months, just depending on where price is moving. Because you always want to be aware where price is going to be rejecting from. So right here, if we got a buy signal, then I'd probably take it, but nothing right now. Euro NZD looks like, yeah, it's going to get stuck within these zones right here. Even if it came down and then it shot back up, it'd probably get stuck here or get stuck here. It's too risky. Euro USD, buy signal right there. Yeah, I would take Euro USD if it closed above the zone, but nothing to take right there. GA, nothing. It's stuck within the zones. GCAD, another zone right here. And GCAD is like a double-edged sword. This thing will give you a lot of profits, but if it doesn't go your way, it's going to hurt because they're worth a lot. GC, GJ. I was gonna call this trade earlier, but it was, you know, obviously the zone's right here. It's too close. Let's see, nothing here. You know, like I mentioned with the zones, it's probably just gonna range in this area before it either breaks out or pulls back even further. So GN, nothing there. It's our GU trade from earlier today. Looks like it's about to hit TP2 right now for 50 pips. So if you guys are still in this trade, it looks great. Just got to give some time. So our GU is about to hit TP. NZD CAD. Getting close to CT's NJ right now. So I got 2 more pairs to go down and I'll get there. So NZD CAD, I don't know if we called this trade, but it would have been a nice entry right here. So it would have been a pivot entry, plus it would have been a zone entry as well.
You did call it.
I call this, yeah.
Oh.
NZD CAD. I think we did, right?
Oh.
I don't know, man. We took too many. We've been winning. Oh, yeah, we did.
78 pips.
We've been winning too much. 78 pips right there, guys. So you can see I identified on the chart. And that was exactly what we took earlier, too. And that's a cool thing with the strategies, too. Like, you can always double up, you know, the analysis. Like, there's an entry for the zone strategy right here. There's also a pivot entry. So if you tie both of those together, that's like almost a guaranteed win. And those are the best trades to take. Let's see, NZD-CHF. I don't know, this is a risky trade. You know, like I mentioned, the CHF pairs are just moving wacky this week. So even though I think it's going to come back down, I just wouldn't take it. Here we go. We finally made it to NJ. So CT said NJ long out the zone in an hour. Yeah, I mean, it could. But me personally, I wouldn't take it because it's against the trend. But he was saying that, you know, in an hour, it'll probably be out the zone right here, which I do agree. It looks like it probably could. And it'll probably give a buy signal. So technically, it could have been a zone entry. But I personally don't really like trading against the trend. So I probably wouldn't take it just because it's a risky, it's just too risky. Like I want to have like all my bases touched where I'm almost 100% sure that the trade will hit. And, you know, and that's why we have such a high win percentage, because I always vet the trades and I don't take any super risky trades. I try to make sure that they're at least like 80% possibility that it'll be winning. And then I put a whole bunch of other factors into it. Yeah, CT said he'd scalp it. Yeah, not worth the risk to take a full move, because if you take a full move right here, it's a big, even though it's only 37 pips, that's still a long way to go. And then it has so many barriers here. So even if it got up here, it might reject off the first pivot, second pivot, third pivot, the K2SR zone, or the fourth pivot. There's like so many different factors that tell me not to take it. But yeah, CT said he might scalp it, and it looks like it could be a decent scalp because it established a strong low down here with you know, a strong bullish candle. So it could well enough push up to here before coming back down. But, you know, like I mentioned, I don't really like taking risky trades. It would be nice, but me personally, too risky. NZD USD. So we do have a buy signal right here. This technically could possibly be a zone entry, but like I mentioned, I don't like to trade against the trend. Since price is below the pivots over here, I would have a sell bias. I would only take sells. But then there's a zone here. So, you know, even if there was a buy right there, I mean a sell, I probably wouldn't take it because I don't want to get caught in one of these zones. And then have it reverse on me. It's just too risky. All right, let's see. Yeah, CC said not on Thursday either. Yeah, I know, because I already know that once it hits like midnight, there might be some volatility because of the news, but overall market's going to be dead. So I just wouldn't even risk it. This is the UCAD position from earlier. I think a lot of you guys are in this. What's the last trade that I shared to the public channel? And I can't remember. No, I'll just share these old trades. These trades are pretty late, but I'm just going to share them anyways for whoever's not in the premium. Yeah, if you guys aren't in the premium, you guys want to copy my trades, you know, right when I take them, you guys can sign up to the premium. Super cheap. So I'll just share that there for whoever wants to copy it. I already know we're going to get questions. People are like, oh, can I still enter this? I don't know, maybe. But yeah, there's UCAD right there. I anticipate it to come down. So, you know, there's a strong bearish candle right here. As it does come down, we're gonna hit TP2 right here for 31 pips. So that's pretty nice. We hit 31 pips right here for UCAD. And then our GUs right here is about to hit TP2 as well for 50 pips. So that's like 80 pips right there for the day. And then if you're trading standard lot, that's like an $800 win right there. It's pretty easy. This would be nice right here. If you see closes below the zone right here, then I would take a short position right here and then just write it down. But we would have to wait for it to come down. I mean, there's probably not going to be very much movement. If there is, then possibly we take it, but it doesn't look like it's going to happen anytime soon. UJ. Yeah, this would be a good sell entry if this closed, but it's too close to the K2SR zone. It's only 17 pips. Even though my spread's like under a pip, a lot of people don't have tight spreads. So that's why I don't want to risk it, because if you enter this trade, you got to pay the 1 pip. Well, you don't pay it, but you come in as a pip lower. And then when you get out, you have to be a pip higher. So in reality, instead of hitting, what is this, like 17 pips, you're going to give away like 4 pips just to get in and out. So yeah, if this closed below, then it'd be good. Then you can enter a sell. But until then, it's too risky. But yeah, I think that's about it for all of these right now. So let me just go back to TJ's question right now. So TJ said, one more question. How do you know when the candle closes? A bit off topic, I know. Thanks. So you'll know when the candle closes because, you know, depending on what time frame you're trading on. So if you're trading on the 4-hour, it has a countdown right here. Well, if you're using TradingView, it'll have a countdown right here. So right here, it'll say 56 minutes until the next candle close. If you're trading on the 30-minute, each candle is 30 minutes. So right now it's 5:03. The next candle this candle would close at 5:30. And then if you have the countdown right here, it closes in 26 minutes. You know, even on the shorter time frames, on the 10-minute. So it's 5:03 right now. The next candle closes, or this current candle will close at 5:10. So in 7 minutes it'll close, or 6 minutes, I'm assuming, because right here on the timer it says there's 6 minutes left on the candle. It just really depends on, you know, on what time frame you're trading on. You know, each candle closes at different times. But I trade on the 4-hour, so I know exactly, and that's why I trade at 6 a.m., 10 a.m., sometimes at 3 p.m. after the swap, and then again at 6 p.m., which is going to be like in 56 minutes, and then again at 10 p.m., because that's when the 4-hour candle closes. You know, I specifically trade the 4-hour, so I know exactly when the candle closes, and I have alerts set up everywhere. So once it gets like 15 minutes before 6, I'll get alerted, and then I can go and pull up the chart, and I can start looking for trades. You know, and the reason I switched to that was because I just don't want to be on the charts all day. Like, you can be on the 30-minute and wait all day for, you know, a signal to appear, but I just don't want to do that anymore. Angel said, do we enter GU and UC at market right now or limits? Angel, I don't recommend you enter it. You're in the premium, Angel, so make sure to look at the premium channel. I see you post a lot in the public chat, but these signals come here hours later. So I think that's why you're seeing them late. But you, like you should be focused on the premium channel, because that's what you're paying for. So when you're in the premium channel, you get my signals as I take them. Like when I take both of those calls were called at 10 a.m. and yeah, that was like 6 hours ago. So I don't recommend you enter right now because you already hit TP for those. This is just for the public group. It's not meant for you. These are for people that aren't in premium, because obviously I still want to share my trades with them because I want everyone to win. But you have an upper hand. You know exactly when I share the trades. I didn't, Angel. So in the public group, they're sent on a delayed send. They're not meant for you. They're meant for for people that aren't in premium, because in premium you get them real time. But the people in public, I mean, that's why you're paying for premium, because you get them when I take them. But people in public, I share it with them so they can enter at a later time, but they're not guaranteed to get prime entry because they're entering hours later. So that's the reason why they're sent again. I mean, they've always been sent this way. Like whenever I take a trade, if I take a trade and we haven't hit TP, or if it's still active, then I'll share it with the public groups. But these aren't meant for people that are in premium, because you already have, you have the actual trade when I took them. But yeah, that's why they were sent in the public, and they're normally sent there around the same time. But Aaron said, "Seen myself on the live." Wait, how'd you see yourself, Aaron? Are you still here?
Yeah.
You saw yourself on here on the thing.
Now when you had you were showing the chat.
Oh.
I had to get my message off.
Oh yeah, I feel you.
It's hot out here, man.
That is. It's. I wonder. I think the heat wave is ending soon, right? Or no? I hope so too. It's been way too hot. Let's see. Angel said, "No, I don't recommend you get into any. When it hits TP1, you get out of a trade. You shouldn't get greedy. Just take your win. A lot of people try to do that, and then they end up getting burned. Especially because, so if you enter right now, Angel, like if you enter right now, you're going to be at a 40 pip loss. That's if you're trading a standard lot, you're going in with a $400 loss already. So this is why I don't recommend you enter trades late, because if you end up entering right here, you're going to risk, instead of just risking $100 from original entry, you're going to be risking, I mean, not $100, depending on what standard, on what lot size you're using. So generally I trade a standard lot. So if you're trading a standard lot on this, your original risk would have been $1,000, right? Because you're risking 100 pips. If you get in right now and you get in at a 40 pip loss, instead of risking $1,000, you're going to be risking $1,400. So that's why I never recommend that you enter a trade late. The trades are set to you guys at a specific time for a specific reason. Like I'm not in this trade anymore because I got out at TP1. But technically it's still active for those who don't want to follow the exit strategy. The exit strategy is just the framework as to how to enter and exit a trade. But it's really up to you whether you want to enter this trade or if you want to get out at TP1. But me personally, I don't recommend you get into this trade late because it's just way too far in profit. You just add on the risk, because when you enter at the original entry right here, you enter at a 1-to-1 risk to reward. If you enter when you're way up here, the risk isn't the same anymore. And if you enter here and then you end up losing, you're going to end up losing more than you profited earlier. It's just like what I was mentioning earlier. It's all about risk management. It's all about getting greedy and trying to hit, as much profit as possible. Because if you just keep winning and you don't lose, you'll still be in profit at the end of the week, the day, the month, whenever. But yeah, I don't recommend you re-enter this because we already hit TP1. If price ever hits TP1, I never recommend that you enter late or you re-enter. A lot of people ask that question all the time, but I never recommend that because every time that people do it, they end up losing. And unless you know what you're doing, then yeah. So like, okay, so say here for UCAD, right? If you wanted to re-enter this, you go on the lower time frame. You just apply the same strategy on the lower time frame for an entry. But if that's too advanced for you, then you should probably just keep practicing the strategy. So I'll go back to GU. So right here, if we were to get a buy signal, then that'd be a valid pivot entry on the 10-minute if you're scalping it. So then you could enter there. But you shouldn't just enter a trade just by looking at the chart. So if you're looking at the 4 hour and you're like, oh, I want to enter because I want to get full TP, that makes zero sense. So you shouldn't enter that if there's no reason for you to enter. The only reason for you to enter is if you go on the lower time frame and then you have an entry here. So if you get a buy signal here, then it would be a pivot entry, right? So if it's a pivot entry, then you can enter a buy right there. And then you would just enter at those parameters. So if you got to say if there was a buy signal right here, I know there's no buy signal, but if there was, you could have entered on the close of that candle. And then you could have shot for that move right there within it. But you would only enter that trade because you have a reason to enter it. You're not just entering it just because you want to. It's because there's a specific entry right there. So let me see if I can show you a better example. So let's see. Okay, so right here, say we had a buy right there, right? Let me just move this over. So say we had a buy right here. And then say you got stopped out at TP1 or wherever it was at. So if I zoom back over here, so say right here you got out of this trade and you got stopped out, right? And then you wanted to re-enter. So say price was right here, but you're already stopped out at TP1. If you go and you apply the pivot strategy on the lower time frame, you can see that there's a pivot entry right here because price is trending up. We had a retracement, a rejection, a buy signal. So right there, you could have re-entered for a buy right there. And then if you let that play out, you would have won right there. And that's a reason why you would re-enter a trade. But there always has to be a reason. If you do anything when you're trading, there's just, you have to have a reason for it. You can't just enter just because you feel like entering it, because that would just, you're basically just gambling at that point, because there's no reason for you to enter the trade. But like I mentioned, if you get a buy signal here on the 10-minute, then yeah, you could enter it. But if you don't understand the strategies, then maybe that's an indicator that you should go and practice the strategies, because like every time I enter a trade, there's always a reason for it. So if you want to go back and relearn that strategy, it would be the K² pivot strategy. So like pretty much it applies on all time frames. So it applies for scalping, intraday, and swing trading. So say if you were in a swing trade and you got stopped out, then you can go back and you can analyze that on the intraday setting. If you get an intraday entry, then you could re-enter off that. Say if you're on an intraday entry like we have right here for GU. So we entered this trade on the 4 hour, but you got stopped out. Then you would just apply the pivot strategy on the scalping time frame, which would be like the 10-minute. So if you wanted to re-enter this, you just go down to the 10-minute. If you have a pivot entry right here, then you could have entered that trade. But it just really depends. What I'm trying to get across to you is that you shouldn't just enter a trade just because you think that it's a good time to enter, or that you got mad because you got stopped out at TV1. Like the only reason you should ever re-enter a trade is if there's an actual entry, because that'll give you confirmation that price is going to continue upwards. Because if you just enter at any time, price could just reverse on you at any given moment, because there's no catalyst for that specific move to continue upwards. But if there was an entry, then it'll continue on upwards. Keith said, like I just did, straight gamble off the indicators. Yeah, I mean, like once you trade long enough and you understand what you're doing, you'll realize that there's a logic to everything that you do when you trade. It's like playing chess. You're not just taking a buy because you think it's going to continue up. You only take a buy or you take a sell if there's a catalyst or something that's giving you confirmation that price is going to move in that direction or that direction. You should never really enter off emotion, because that's how a lot of people trade and how a lot of people blow their accounts. So, that's just my advice. If you want to enter it, you can, because I do anticipate it to come up. But like I mentioned, you're going to be entering this at a 40, 50 pip loss. So if you're going to put your stop loss way down here, then you're just going to add on double risk. You're basically trading at a 1-to-2 instead of a 1-to-1. So, or a 2-to-1, the opposite, because you're taking on more risk than reward for the most part. But yeah, I mean, that's just my explanation as to why you shouldn't enter just now. But let's see. So if there's anything else, it doesn't look like there's any other questions. So I'll probably go over the strategies, and then I'll go over some entries at 6. And then if there's nothing after that, then we'll get off for the day. But if you guys do have questions, feel free to put them in the Q&A, and then I can answer them. See, Keith said posted results. Did you post that in the Telegram, Keith? I don't think I see it. I guess I'm gonna step away for 1 second, guys. I'll be right back. Yeah, this right here. All right, guys, I'm back. So let's it's only 5:17. We have a lot of time, so I'm gonna go over the strategies real quick. I'll go over each strategy. I don't know if there's a specific pair you guys want me to look at, but let's go to some generic pair like Euro USD. So for Euro USD, the first strategy I'm going to go over is going to be the K2 intraday strategy. So technically this can be used on all time frames, but what I recommend is that it's applied on the 30-minute, because that gives you a good time for you to get in and out of trade within the intraday settings, because obviously you don't want to hold this trade for too long, like more than a day. So basically the way that this strategy works, this is the K2 intraday strategy. Original. So this is the first strategy. First, you want to identify a valid K2 signal, confirm signal matches trend meter, and then lastly, enter on the open of following candle. All right, so pretty much right here, you want to identify a valid K2 signal. Right here, we have a valid buy signal, since it's a green buy signal with a green bullish candle inside. So this is a valid buy signal. Next, you want to confirm the signal matches the trend meter. Right here, we have a green signal with a green trend meter. So once those two are met, you can enter on the open of the following candle. You can enter a long position right here. You can, and then you can just let it run. So generally our stop loss will be placed at the previous swing, so you can bring it down to here, about 26 pips. And that's about it. So you let this run, and there you go, full TP, guys. Super easy. All right, the next strategy is going to be the K2 momentum pullback strategy. So this strategy is pretty much the same thing. It's just a different entry. So let me just change the settings here. This is going to be the K2 momentum pullback strategy. So first, you want to identify a valid K2 signal. Next, you want to confirm, instead of confirming that the signal matches the trend meter, you want to confirm signal does not match the trend meter. So it's pretty much the same strategy, except you're looking for opposite things. So previously over here, we wanted to make sure that the trend meter and the momentum was in the same direction. So the valid K2 signal was going up, the trend meter is going up. In this situation, we can see that the trend is still going up. So obviously we want to take only buy entries. However, what we're doing is we're waiting for a pullback. In order to identify this pullback, we want to get a valid K2 signal that doesn't match the trend meter. So if the trend meter is angling up, like it is right here, oh shit, wrong tool. If the trend meter is angling up, like it is right here, and then we get a valid K2 signal, but it's against the trend, what do you think is going to happen next? This is only a minor pullback, and then what's going to happen is once we get a buy signal, it's probably going to shoot back up, right? So in this situation here, you want to identify a valid K2 signal. Right here, we have a valid valid sell signal because it's a sell signal with a red bearish candle. Next, you want to confirm the signal does not match the trend meter. So down here, you can see that the trend meter is green, so we only want to take buys. So another difference here is instead of entering on the open of the falling candle, what we're going to do is we're going to enter on the high or low of the falling candle. Oh no, high or low of the signal candle. Sorry guys. So basically, if you're entering a buy, and we're entering a buy here because the price is trending up, and the signal is going opposite direction. So this is just, instead of this being a momentum swing down, this is technically just a retracement or pullback in the opposite direction of the trend. So right here, since we're taking a buy because we want to trade in the direction of the trend, we're going to enter at the high of the signal candle. In the opposite, if we had I don't think there's one here. In the opposite, if we had a downtrend right here, and then we had an opposite signal, we'd enter a sell. So we'd enter at the low of this candle. But back to where we were analyzing, right here, we're going to enter on the high of the signal candle. So we're going to enter a long position on the high, which is right here. Same situation, you're going to put the stop loss at the previous swing, which this would be a little too far. So I'd probably just, and the thing with this is it's a bit subjective. So I'll consider this like the swings that swings up, swings down, swings up, swings down, swings up, swings down, for about 20 pips. And then you let that run. So the thing with this right here is we put a buy stop order. So our order hasn't filled yet. It's still a pending order. Once price comes up, then it'll be filled and then the trade would be active. Right now it's not active, but now you can see price came and pushed above. So in this situation, the trade would now be active. So we let that run and there you go, full TP. So as you can see right here, this would have hit full TP. This was the previous intraday position. This would have hit full TP. And then on top of that, if you wanted to enter another intraday position right here, because we had a buy signal and it matches the trend meter, you could have entered that right there and another full TP. So you would have had 3 full TPs right there if you took all 3 trades. So it'd be 23, 23, 23. So you multiply that by 3, you would have locked in 69 pips with just trading the Euro USD at that specific time. Super easy. All right, so we've gone over that strategy. Let's see what we got next. The next strategy is going to be the scalping strategy. So for the scalping strategy, these are a little older, and they're very specific. It's pretty much the intraday strategy and the momentum strategy just on a shorter time frame. But I'm just going to go over the pivot strategy because that's all I recommend right now, since it's probably the easiest for you guys to learn if you guys wanted to trade that. So we'll just turn on the pivots indicator. And those are going to be the indicators you use, the momentum indicator and the pivots indicator. So let's go on the shorter time frame, like the 10-minute. And then you go somewhere like over here. And then I'll just put the same requirements as we did before. So this is going to be the K2 pivots strategy, scalping. And scalping can be done on 10-minute, or it can do 5-minute, 10-minute, 15-minute. Those are generally the good scalping timeframes, but it just really depends on you on how you want to apply it. So first requirement, identify trend via K2 pivots. Second requirement, identify retracement pullback. Third requirement, identify rejection of K2 pivots area. And lastly, identify valid K2 signal. And then you can enter on the open. Enter. Cool. So right here, pivot strategy. First, you want to identify the trend. You want to make sure that price is above the pivots. The pivots are spread out. They're all angling in the same direction. And then that will confirm that price is trending upwards. Right here, price is above the pivots. The pivots are angling upwards and they're spread out. So it's clearly in an uptrend. Next, you want to identify a retracement pullback. So you can see your price came up. It rejected off this point, and then it came down. So this is a retracement pullback. Lastly, identify rejection of the K2 pivots indicator. The K2 pivots area. So right here, you can see price came up, it retraced right here, and then it rejected off the K2 pivots right here. So requirements 1, 2, and 3 have been met. Lastly, identify a valid K2 signal. Right here, we have a valid buy signal because it's a buy signal with a green bullish candle. So once those 4 requirements have been met, 1, 2, 3, and 4, you can enter on the open of the falling candle. So right here, enter a long position, and then you let that run. And there you go, TP. So we've only been looking at Euro USD this whole time. We applied every single strategy, and they all hit TP, guys. So that goes to show that you can apply any strategy. It doesn't matter if you like one more than the other. They're all profitable strategies. We're all applying them on the same asset around the same time period, and they work perfectly. So there goes the pivot strategy. And then the next one's going to be the zone trading strategy. So I'll go back to the 4-hour. And basically, what you want to do first is you want to identify areas of rejection, basically the K2 pivots. So instead of having these lined up on here, I'm going to draw my own zones over them like this. And then down here. And you only really want to know where the nearby pivots are with regard to price. Like there are pivots down here, but these are kind of relevant because you're not trading down here. But it's good to know if you just want to like visualize it, but it's not really necessary. All right, so right here, I'll just rewind to like this candle right here. And then I'll close these pivots, and then I'll show you how the strategy works. So this is going to be the K2 SR zone trading strategy. So for one, you want to identify direction of momentum via K2 momentum indicator. Next, identify a break and close past K2SR level or K2SR zone. And then lastly, you can enter on the open of the following candle. So it's real simple, guys. If you guys look at all the strategies, I make it like as simple as possible. There's like, it's really hard for you to mess this up because if the requirements aren't met, then you don't take the trade. The only reason you take the trade is if the requirements were met. So right here, you want to identify the direction of momentum using the K2 momentum indicator. Basically, right here, we have a buy momentum signal, right? So in this situation, we're identifying that price is going to continue upwards. If we have a sell indicator, then we're identifying that as either a retracement or a momentum swing downwards. There's other things that you can use to identify if it's a pullback or a actual momentum candle. And one thing you can do is you can use the pivots indicator. And the pivots indicator is going to direct you towards the direction of the trend. So obviously if price is trending up and you have a K2 momentum signal in the opposite direction, then this would be considered a retracement. It wouldn't be considered a momentum swing downwards, or technically it would, a temporary retracement, but you wouldn't trade in that direction because the trend up is so strong. Like right here, you can see momentum swung down, but then it shot right back up. Same with right here, momentum swung down, and then it shot right back up. You don't want to go against the trend, especially if the trend's super strong. So like I mentioned, you want to identify the direction of momentum. Right here, we have a buy signal. So we're confirming that momentum is going to be swinging up for a while now. So after you've confirmed the direction of the momentum, you want to identify a break and close past the K2SR level. So as you can see right here, price was within this level right here, or this zone, I guess. And then once price broke outside of it and closed, that would have confirmed the second requirement. So the first requirement was met because we identified a bullish momentum right here. Number two, identify a break and close. That's fulfilled because price broke and closed above here. So after that, you can enter on the open of the following candle. So we'd enter right over here. And then we place our stop loss at the previous swing, which would be right here. Let's round it to like 100 pips. And there you go. It's all set up. After that, you let it run. And as you can see, hit full TP right there for 100 pips. So if you took this with a standard lot, then this would equate to $1,000 profit. And that's how easy it is. So as you can see here, we applied every single strategy. We applied the intraday strategy. We hit like 4 TPs there. We hit the momentum strategy. We hit 2 TPs there. We hit the scalping strategy. We hit TP there. We hit the zone trading strategy. It hit TP there. It doesn't matter like which strategy you want to learn or which strategy you want to focus on. Regardless as to the strategy, as long as you do it properly, you'll win regardless. It's hard for you to lose if the strategy works so well. It doesn't matter what strategy you use because they're all equally good. A lot of people ask me, what's better, what's not better. There's no easy answer to that because they're all good. So, it doesn't matter if you want to use the intraday strategy, the momentum strategy, the scalping strategy, the zone strategy. Asset, any time frame. And lastly, the daily US 30 strategy. I was going to go over that, but we've already, I've went over that for today already. So it's going to be hard for me to go over any other trades, but maybe I can find something else. So I can start from like the beginning of the week or something. So we go to US 30. When did this week start? This week started on the, not the 17th, or it might have started on the 17th, right? Yeah. 17th. So if we go on the 17th right here, we'll start at 6:30 a.m. So 6:30 was right here. So, let's go back to the requirements again. So this is going to be for the whole week, guys. So this is the K2 daily US 30 strategy. So for one, look for trades after New York Stock Exchange open. And that would be 6:30 a.m. 70-hour savings time. And then next, take first valid K2 signal. All right, so right here, 6:30 was right there. First valid signal is right there. Enter a sell. Like I mentioned earlier, 1,500 pips. Let it run. I think this one took a long time, but yeah, there you go. So we hit full TP right there. Easy strategy right there. Whoops. And then if we keep running it farther, we'll move it to the 18th. And then again right here. Same strategy. 6:30 a.m., which was right here. First valid signal is right there, enter a buy. 1,500 pips. Let it run. I think this was the one that took a long time, but there you go. So it hit full TP again. So Monday, full TP, 1,500 pips. Tuesday, full TP, 1,500 pips. All right, next day was right here, 6:30. So it hit TP right there. 6:30 hit exactly where that signal came. So we're not going to take that one. But we're going to take this one right here because this is the first signal. We'll take a sell right here. $1,500 pips. Let it run. Full TP again. So 1, 2, 3, Monday, Tuesday, Wednesday. That's a lot of money. Times 3. You would have locked in like 4,500 bucks already. 3 days. And then the 20th today. Well, I already went over the 20th, so it's not really necessary. Angel said, can you apply the store? Can you apply this in the linen session? Technically you can. I don't recommend it. Well, because I haven't tested it. So, you know, this strategy was meant for the New York Stock Exchange, but a lot of people have applied it in London sessions. So you can use it. Marcus and Ariane, you could hit them up because they actually apply it during the London session and they've been pretty profitable. So it does work. It's just that this specific strategy was based on the New York Stock Exchange because we're trading a US index. You know, US 30 is a US index. And this is meant for the New York Stock Exchange, but it's going to have a lot of movement during London session, obviously, because it's a big session. So technically you can apply it, but me personally, I can't give you confirmation that it'll work because I don't use it myself. You know, I only teach what I use. But you can talk to Marcus and Ariane in the group, and then they can give you their opinion because they're the ones that use it, I think, during London session most of the time. TJ said, bro, can you go over scalping strategy like 5 minutes? Yeah, sure. So we'll go back to your USD. Turn on the pivots. Let me just take this off. All right. So let's just, we could replay it somewhere like right here. I'm just replaying it because this is the most recent time. So this is where time currently is. I'll just replay it where I see the first entry. So there's no entry here because it's an invalid buy signal, but this is a valid buy signal right here. So using the pivot strategy, first you want to identify the trend. Price is above the pivots are angling up, the pivots are spread out. So obviously price is trending upwards. Next you want to identify a retracement. Price came down, it went up, retraced from this point. So price established a high and then it retraced downwards, right? Requirement 1 and 2 have been met. Third requirement, you want to identify a rejection. So there's a rejection right here off this lower end. So that confirms the third requirement. First requirement, trend up. Second requirement, retracement. Third requirement, rejection. Last requirement, valid K2 signal. Once those are met, you can enter a long position right there, and then you let it run. And there you go, profit target. It's real simple. And you can apply it on all time frames. Like this is the 5 minute. That's a win right there, obviously. The 10 minute right here. right here. That's a win as well. The 15-minute. There's another right here. So right here, price is trending up, right? Because price is above the pivots. I can just rewind it. So price is above the pivots are angling up. They're kind of spread out. Obviously, uptrend. Right here, price came up, came down. There's a retracement. Third requirement, rejection. There's a rejection off here, off the K2 pivots. And lastly, a valid K2 signal right here. It's a valid buy signal. Enter a buy. Full TP. Same thing. It's that easy. But yeah, I mean, that's pretty much it for those strategies. We've covered pretty much all the strategies right there, and you can see that they're all profitable. They all work. So, you know, as long as you learn the strategies and you master them, you know, you could be a profitable trader rather quickly than, you know, learning these other strategies that don't really work. Obviously, I showed you that all the strategies work. We use them on Euro USD. I haven't back tested this. This is all from today. And they work on all the time frames. So if you're new, then I would recommend that you apply this strategy, the pivot strategy. There's other like you can also use like the intraday strategy, but with the current market conditions, it's hard to find entries with these two strategies right now. So me personally, I would recommend that you just focus on the pivot strategy. If you're new to trading, or if you just want something that you can pick up really easily and you can be, you know, pretty profitable with. Yeah, just like I showed you with Euro USD, there's a ton of entries there for every single strategy. So it just doesn't matter. It doesn't matter what you want to apply. As long as you do it properly, you can make profit off it. Let's see. So I think that's it for the questions. It's about to hit 6, so I'm going to go and I'm going to scan the charts for any entries off the 6 p.m. 4-hour candle close. But if we don't have any questions, then I think that'll be it for tonight. Otherwise, if you guys have anything else you guys want me to go over, feel free to put them in the Q&A, and then I can go over them before I get off tonight. But for now, I'm just going to scan for trades, see if I see anything. Nothing here for odd CAD. If we got a buy signal, then it'd be a possible buy, but there's no entry right here. And the strategy that I'm applying right here is the K2 zone trading strategy. So this strategy is the one that I use for all the signals. Sometimes I use the pivot strategy, but that's because these are intertwined. So usually if there's an entry for this one, there's an entry for this one. If there's an entry for this one, there's an entry for this one. It just, they both line up very well. And if I see an entry for both, then I'll like for sure take that trade. Like I'm gonna go heavy on that trade because I know I have almost 100% positivity that trade's gonna hit. So if you're applying the strategy and you want to trade exactly how I do on the 4-hour, then I recommend you focus on the zone trading strategy and the pivot strategy. And then you can see, like, once you get the hang of both of them, you'll see that they line up almost every time. Well, at least the ones that I've been calling that have been hitting TP, basically. And that's why I have the pivots on here. The pivots aren't required for the zone strategy, but like I said, if I see an entry that lines up with both of them, then that's almost 100% going to win. And that's why I focus on having both of them on at the same time. So AJPY, no entry there. Odd NZD. I wish I called this yesterday. This happened at 2 a.m. though, so I was asleep. But if we did call it, you know, it would have been a nice win right there. Odd USD, nothing there. CAD CHF. This technically would be a sell entry, but like I mentioned, I like it when both of the strategies line up. So right here, if we were to take a sell, it'd go against the trend. And me personally, I don't like trading against the trend, so I wouldn't take this sell right here. No entry. No entry for CJ. Euro odd, no entry right there. Euro CAD, no entry. EG. Like I mentioned earlier, there's an entry right here, but it's just too close. It's about 25 pips, but this is going to move really slow, and it's kind of late. Like it would have been good to enter like right on the close. So no EG. Actually, it might be a decent trade. Let me see, like a scalp move or something. No, it's too far. See, I don't like trading when it's past the zone because you might get caught in that trade. Nothing for EJ. EN. It doesn't look like anything's there either. EU, nothing there. GA, nothing there. GC, nothing there. This GC, if it closes above here, there might be an entry, but like I mentioned, it's too close. It's only 15 pips. I like at least 20 to 25 pips. That'll give you some cushion for you to enter a trade and then possibly get out in profit before it may reject off, the pivot. Or I mean the pivot, the SR up here. GJ, it's too many zones right there, no entry. GN, no entry here as well. GU, still waiting for this. It's about to hit TP right now, it looks like. 50 pips. NZD CAD. This is one that we called earlier, actually. It hit full TP already. So that's good. NZD CHF, no entry there. NJ, no entry there. NU, no entry there. Here's our UCAD. Let's see. Angel said, I think UC moved fast. My limit didn't trigger. Yeah, it might have. Or I don't know. It might have been your spread, Angel, because if you see right here, see price actually came above the entry right here. So it came up about like 3 pips. So my spread's only 1.5. So I would have, if I was to take this again or try to re-enter earlier, at the original entry, I would have gotten in. So it might have been your spread why you didn't get filled. It depends on your broker. If you're using an unregulated broker, odds are that their spreads are probably not that good, or their execution times are just not good. And that's why I don't recommend unregulated brokers to people. I mean, I know it's good when you're trading a small account and you're trying to grow it because they give you good leverage or like high leverage, but your execution times and your spreads aren't always going to be the best. And that's why I almost never recommend, unregulated, even though when I trade indices, I use Hugo's way and that's unregulated. But I know the risks that come with it. That's why, I take it with a grain of salt, but I just don't recommend it to anybody. But it looks like yours probably should have filled, Angel. Because it's 3 pips above. Unless your spread's above that, like farther above that, then maybe. But it looks like it probably should have if you got in at the specific original entry point. No entry for USD CHF. If price was to break below the zone, then it'd be an entry, but it doesn't look like there's anything there right now. UJ, nothing there either. So it doesn't look like there's anything to enter right now. I'm going to look again at 10 p.m., but with the European news coming at midnight, there's probably not going to be any more calls. But yeah, guys, so it looks like this is going to be it. There's no more questions in the Q&A. But if you guys have any other questions, feel free to put them in the Telegram or message me privately, and then I can answer any of your questions. But yeah, thanks for showing up, guys. Just a reminder, we have this every Tuesday and Thursday at, I forgot the time, at 4 p.m. So 4 p.m. Pacific Daylight Savings Time, which is California, Los Angeles time. If you guys ever want to join, feel free. If you guys want to tell anybody, this is all free. So, this is open to everyone. But yeah, I'll be in the Telegram shortly, and then I'll be sending this out, the replay, as soon as it's done processing. But yeah, guys, thanks for showing up, and then I'll catch you guys in the chat.